Well, Infosys reported another miss in the quarterly earnings and a big disappointment at that. The constant currency this quarter declined by 2.2% as compared to our expectation of just a 0.4% decline. So a sharp miss on the top line itself, and that trickled down into the operating performance, with the margin coming in at 20.1% versus expectation of 20.7%. So on a sequential basis, there was actually a decline in margins versus the expectation of an expansion. Profitability, however, optically is looking much better than expectation at over 7,000 crores. But do remember, the other income is actually higher, and that's the reason you're seeing a profit beat. But otherwise, it's operationally weak quarter. Not just that, even in terms of guidance, there's a sharp miss coming in. The company is talking about a growth of just 1 to 3% in constant currency in the coming year, that is FY25. This is much lower than what Street was expecting. Remember, part of the Street had factored in a 3 to 6% kind of growth guidance as well, and the weakest on the Street had an expectation of at least 2 to 5%. So 1 to 3 is a big departure, at least on the higher end of the range versus the Street expectation. The dollar revenue also came in at $4,564 million, below our expectations. The profitability, as I talked about, was just better on account of one-off. Though the deal win number is quite strong, $4.5 billion is actually much ahead of expectation, because Street was talking about a number of maybe $2.5 billion. So that's the only silver lining in the number, because other than that, it is a big miss coming in across the board. The management says that they are looking at excellent traction from clients in generative AI, and of course they've announced an acquisition as well of almost 450 million euros. But the ADR is already reacting negatively to the big miss that we have seen coming in from Infosys this time around.
If you like this video, then like, share and subscribe to ET Now.